Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, volatility is coming into the market, but we also have a very important indicator that is giving us major warning signs. You're going to want to pay attention to this. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Use promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out, and the specials run till Christmas Day, so don't forget to take advantage of it. Incredible deals. Thanks for listening.
Bob, your sleuthing has got me intrigued. This one chart that we're about to show here, if this doesn't scare you a little bit, I don't know what will.
Yeah, I don't know, man. It's amazing. Is this the one with the M2 collapsing? Yeah, so here's the situation, guys, and the chart's up here. We have basically, our system is a debt-based system, okay? And it requires ever-increasing amounts of debt / productivity / velocity to outrun a collapse. And we're here to show you that the money supply is absolutely falling off a cliff. Velocity is falling, and bank lending went negative. And here's the one, and this is McClellan Oscillator. You guys can find him on Twitter. And this thing precedes market activity. And look at this thing. We've been defying the odds here with this move up since Halloween until today. And we're going to talk about that one in a minute. But we have a situation now where, after these year-end flows get absorbed, that there's no good guys left. And Janet Yellen has to abandon her meth-addled Fed, treasury auctions. The Fed's going to be confronted with higher interest rates. The world is still scarier, and market activity and economic activity is falling. So it's a perfect storm coming up. And you know what? You can't grow the economy without increasing debt. And the next chart we want to show you is that ain't happening. We're right back to where, and every time this has gone negative, not only did you get a recession, you got a major market sell-off. And I'm still in the camp of, before this thing re-bulls up, we're going to see 30-40% sell-off in the market minimum. I don't care what anybody tells me. You can't tell me that remember, we can have high cost and we can have deflation too. Okay. So if you have low velocity, low bank lending, and low money supply, you're not getting inflation. You can have high costs, but it gets sacrificed at the altar of economic activity. And you can easily go into a recession for that. And the other thing, Phil, too, is before we have that is, I'll talk to you can throw attaboys up. We've just been on fire here lately, is that, we don't have the chart for you, but we have a dynamic algorithm that basically looks at swing lows, and it gives a dynamic Fibonacci pullback activity. And we went 48 days on, I think it was the 4-hour, correct? Without a pullback into that range, which is just unheard of. I don't think we've ever seen it. And it broke today. And when 4-hour trends break and 8-hour trends break, these aren't one-day wonders typically. And so if we have follow through tomorrow, then I think we're in for a couple of days of pretty good selling. And the way the selling works, it's going to Eiffel Tower some moves here. So we could be in a situation, Phil, where, we could pull back, maybe even a couple hundred points, because we have JP Morgan's caller at work too, before we get an end of the year blastathon. And I'm going to throw it to you there if you have any comments, and if you want to throw up the attaboy, we can do that as well.
Yeah. So, I mean, if they take this to the extreme, I think you really have a small window to do this. But, one thing that can happen is you're going to have dip buyer after dip buyer after dip buyer. They keep, running this back down. And I think that's what we saw today. We did intraday. We saw a lot of dip buy attempts, and they were just getting run over. And we saw broad selling with a bunch of negative ticks coming in across the board. But, this is if you look at this level here, this kind of served as resistance, and then we broke out over it, right? So I think, if we come back to this level, that would be a massive buy opportunity. They talk about the JP Morgan caller. That's going to sit around 45.50, which is around this this level here, I would say that would be the most extreme move, and you'd probably want to step in and buy that. Because again, the holiday week, especially when a big run up that we've had, you're almost guaranteed a green, what they call the Santa Rally week, right? Which is that last week of the year. And then that follows through with extremely high probability of also a green first week in January. After that, you got to watch out. And the reason for that is because we have a ton of call volume that expires on this January OPEX, which is the most significant expiration that we have in terms of call volume. So that's going to happen on the 19th. When that falls off, all of the dynamic that's been behind this move, this rip higher that told you the gamma flows, and a lot of the gamma analysts were the quant guys that follow that modeling were saying that we're probably going to have this big squeeze into the end of the year, completely played out. But they'll also tell you that come January OPEX, all that tailwind goes bye-bye. So then you have to look at what's driving this market, and that's where the rubber meets the road. So, I think we're going to see, it might be a little bipolar going into Q1, and you're wondering, why did we bid like no tomorrow going into December, and then all of a sudden we can't find a bid going into March or something like that. So but those flows, Bob has said this before, all that really matter, like throw fundamentals out the window, earnings and all that stuff, bad news doesn't matter as long as the flows are pushing in one direction or the other, and that's all that matters. And the media will stick whatever headlines they feel like they have to justify the move.
Yeah, and let's be clear here. For the trolls that will troll us anyway, we're gonna be wishy-washy because we're gonna let the market tell us whether or not our macro views are right or not. I mean, we pulled people out of oil trade right before it collapsed. Phil told people to get pretty short today. I think he has an attaboy on that. I mean, market dropped 60 points from there. The other thing too, Phil, we had huge volume today at resistance for TLT and TMF, and they broke out from there. And that's scary. When you get a high volume move at resistance and it breaks through, that means people were desperate to take it even higher. So it's going to be really, really interesting to see. But I agree with you. These moves are elevator escalator. I think the sell-off's going to be fast. And the reason being is because of the flows. Remember, if the stock market's falling, the calls are losing value. That means the dealers and the market makers, they can short the futures because they don't no longer have to hold a call. Hold the long futures to protect themselves or hold SPY. They could sell it because they're trying to maintain a delta neutral environment. And all those put sellers out there, that's the fastest money out there. If you're selling puts, the last thing you want to do is be caught in the money because you don't know how far you can go, and they'll bail out in a heartbeat. And so that's why you see these accelerations to the downside when they happen, and then it grinds up higher again. So, we're still in the camp that, we'll probably see higher highs into the new year, but we could probably still fall a couple hundred points. Now, if tomorrow they turn this thing right back around again, and then, Santa's coming early, but it looks like more than a couple days here to me, Phil.
Well, and the other thing that is curious to me too, and this is something we've been harping on for a while, this is a chart of TLT on the 4-hour range trader. Now, it's been behaving like a normal market where you break through the range trader levels, right, and you flip them back and forth. That's pretty standard stuff. But notice that right now the bond market and the stock market have been trading somewhat in sync, right, up and down. But notice over here, like all of a sudden now we've got this divergence of Stark right here on this move. This move here ended that relationship, in my opinion. Like we pulled back here and there was a little bit of a divergence, but then bonds kind of caught back up to the move. But now we've got where you had straight up selling and the bond market didn't even flinch. I mean, it had a little bit of a wiggle here, but they ended the day up, going back up green, and we ended up at the day's low. So why that matters is because the traditional recession trade is going to see TLT ripping away while equities sell off. Now, does a couple hours make a new recession trade happen? No. But if this persists into tomorrow and it persists into the next week and persists into January, then you probably have the makings of a recession trade. Now you got to think back. The Fed all of a sudden got real dovish and said they went from no cuts in 2024, figure 2025 for your first cuts, to now probably 3. And Powell at the presser, and it's been totally glossed over, said we're likely going to be in a recession in 2024. This is the stuff you look for to confirm that, because this is what the big boys are doing. This is the bankers, and they're basically, if this continues and this divergence continues, we've been talking about this trade setting up for months now, and we could be finally upon it. So I'm not going to bang the table and say this is it here, but this is about as probably the biggest piece of evidence that trade could be setting up I've seen in a while, just because of how divergent this move is.
Yeah, it was interesting. Also, Bitcoin was divergent today too. So I thought that was fascinating. Silver stayed green. So look, we're just way overbought right now on the stock market. So even if you're a raging bull, you know, you don't panic yet anyway. But this move could take it. Look, we've seen 2-3 weeks worth of gains go away in 2 to 3 days, and that's my expectation here. And they're going to clear the brush, and then they're going to light another bull, and then next year, then there's really nothing left. All the firewood's been burned up.
I totally agree. It's going to be a very interesting 4 weeks, I think, that we got coming down the pipe. So buckle up, guys. It's going to be wild. All right. Well, let us know your thoughts on the information here, guys. Also, check out our specials at tradegenius.co. Got them running into the end of the month. And if you want to be in the room with us where we're calling out these moves in real time, that's where you can go to sign up and get into the room with us. We have a chat room. We also have a live voice room. So it comes with various different packages that we have on the site. As always, guys, thanks for watching. Thank you, Bob. Awesome charts. We'll see you guys in the next video. Take care.
Trade Genius.